Assalamu alaikum. Welcoming you everyone in the class of Finance and Banking. This is Khadijatul Juhra. Today I am going to discuss Chapter 7 Share Capital and its Types. The name of our chapter is Share Bond and Debenture. Let's start the class. At first we have to know what is share capital. Shares are the small part of huge capital. That means if we have capital of 10 lakh taka, share is the small part of it. It may be of 100 taka or 500 taka or 200 taka. That is the small part of a huge 10 lakh taka is called the share capital. Buying shares can encourage the small investors. Those who have small amount of money but want to run a business, they can buy shares, and buying these shares they can be a owner of the company. Thus, small investors become the owner of the company. To attract the investors, the company issue different types of shares. And different types of shares are listed here. These are general share, priority share, deferred share, right share, and bonus share. General share. Equity shares, or otherwise called as ordinary shares, are the shares of general types that carry voting rights at the annual general meeting of the company, or differential voting rights related to dividend, voting, etc. General shareholders are indeed the owners of the company. If the company earns profit, it is distributed among them as dividend. The invested money of the shareholders is not refundable. However, if the liquid money is needed, the shareholders can sell these shares in the secondary market. And if the price in the secondary market is high, then common shareholders can earn more profit. But if the share price is low in the market, they can be faced by loss. Giving dividend is also not mandatory for the company. If no profit occurs, dividend is not usually given, but if there is more profit, common shareholders are profited by getting more profit. Priority share. Investment in priority shares is considered a good tool of investment for those investors who expect income at a certain rate from their investment in shares. However, in our country, priority shares are not found so much. The main characteristics of priority share is the certain rate of profit. In our previous slide, we say that the common shareholders get dividend at unfixed rate, at indefinite rate, but in priority share, shareholders get dividend at certain rate or fixed rate. Deferred shares are those shares for which owners receive dividends after dividends have been distributed to all other classes of shareholders. In case of company closure, the demands of these shareholders are fulfilled at the end. Generally, company founders or promoters buy these types of shares. For this reason, this is also called promoter's share. Right share. When old shareholders get priority in shares in case of selling shares after the formation of company, these shares are called right shares. It means when in later time the company sells more shares to collect more fund, and then the old shareholders preserve the rights of buying those shares at that time. Those sellable shares are called right shares. Bonus share. When companies' undivided earnings are not given out in the form of dividends or liquid money but are converted into free shares, these are called bonus shares. Bonus shares are shares given to the old shareholders at a proportionate rate. These are the types of shares, and now we are going to discuss features of general share and priority shares because these two types of shares are most important types of shares. General shares provide ownership of the company to the share investors. As a result, as an owner, he has the legal rights on its profit earned and its assets. General shares give full authority to its owners to control the company. Shareholders control the company by applying their voting right in taking important decisions. And the last features of general share is general shares are easily transferable. The investors, according to his or her wish, can hand over the shares at ownership at any time. Features of priority shares. Priority shares holders are not considered as full owners of the company. They are considered in between the owners of general shares and the owners of bonds and debentures. That's why priority shares are called the hybrid types of shares. For many priority shares, alternative options are there to transform them into general shares. So, if the investor wishes, he can change his status to an owner of general shares. This is very useful characteristics of priority share. That's all for this class. Here is two homework for you. And one is write down the advantages and disadvantages of general share, and another is advantage and disadvantages of priority share. Thanks for doing the class. Goodbye.